Hi, my name is Kelly Hazar, and I'm the branch chief of the Budget Execution Support Branch. Over time, we've been doing a training demonstration to go over the reimbursable flow for our reimbursable agreements documented in FEMI as sales orders. So today, we take some time to videotape the presentation so that people in the field that haven't seen the live demonstration might be able to see it. The reimbursable process starts every year at the beginning of the year, where my staff will go out to the program staffs and get general estimates on the work that might be performed at the local level. These estimates are all rolled up, and we record them in the accounting system in one large lump sum. We create a document that will create a general ledger 4450 and 4590. And in the background, it also creates a general ledger 4210. This is before any sales orders have been entered as requested from a field office to the Minneapolis office. At this point, my staff steps out of the process. And from here, the field office will work with Minneapolis to enter their actual sales order. In this case, we're going to talk about some general ledger accounts. So these are the two big ones, 4590 and 4210. And from here, we have general ledger 4610 of allotments and consumable budget. Then we have the spending chain, which starts at 4700 and continues all the way through 4902. Lots of people, when we converted to FEMI, were very scared about the general ledger accounts. But they're really no different than our budgetary object codes, which tell us the type of transaction. This just ends up telling us the status. So the first thing that happens is that the field specialist will negotiate a sales order work plan. And in this case, we're going to say that the agreement is for $300,000 to perform airport work within Wildlife Services. The spoon here represents $50,000. So when the sales order is entered in the system, it creates an accounting change. And it takes $300,000 out of the general bucket and puts it down into consumable budget, which is 4610. So we'll put 6 spoonfuls here into 4610. At this point, the federal partner or the state office can now consume the budget and begin the project activities. But what I want you to notice is that at this point, we haven't billed the customer, GL 4251, and we haven't collected anything. So at this point, our customer is just telling us that there's a promise to pay. And we've also created GL 4221, which is an unfilled customer order without an advance. So these two general ledgers are creating a relationship with the overall estimates that have been put in at the agency level. Now from here, once the program begins, we might have some payroll costs. So when payroll comes into the system, it doesn't affect the spending chain from a sliding standpoint. It just affects it straight from consumable budget down into disbursements or GL 4902. So we'll say one pay period has passed and the people that are working on the project have been paid. This will, in effect, scoop amounts out of consumable budget into disbursements. And another common scenario is that we might be ordering things. And if we're ordering things through the Integrated Acquisition System, or IAS, we're going to put in an IQ document, which is our commitments, GL 4700. So again, it's going to take money out of my consumable budget and move it into 4700 commitments. At that point, I've only asked for the requisition to be created. I haven't actually obligated the award. Once I obligate the award, say I did it for $50,000, but I only made the final award for $45,000. So I'm only going to put a majority of the funding into 4,800, but the 4,700 that's been committed, as long as I decommit it in the system, it will actually release and go back to consumable budget. At this point, after the services are delivered, and I've received the product that I've ordered, I'm going to request payment through a goods receipt and invoice, and it will move the amounts from the obligation status, 4,800, into 4,901. So now this cup is empty. And then from 4,901, it will ultimately pay the contractor into 4,902. Now, when I first set up my sales order working with Minneapolis, I also decided that I was going to bill on a quarterly basis. So we can make an assumption that I only have one pay period here in 4,902, but we're going to shake some more amount down into 4,902. And still, at this point, before I've done any billing, I only have consumable budget left of perhaps $175,000 because the rest of it is dispersed out and paid. And from this point, the Minneapolis process is that the billing will run on a quarterly basis. And what the system is going to look for is items within the system that have been fully paid out. So we only bill our customers for amounts that have left our financial system and either paid our employees or paid our contractors. And what this does is it ensures that when we bill our cooperators, we're only billing them for amounts that are final and closed, because we don't want to bill them for things that are undelivered or perhaps just committed in an idea that we're going to have an obligation and ultimately a payout. So the first thing that's going to happen is now we're going to move to what we would call like the backside of the sales orders. And we have the solid $300,000 is still hanging out in 4221. And we need to move these amounts through the billing and collections chain. So at this point, we'll just assume that down in 4902, there's about $125,000. And so we would then bill them $125,000. And these two accounts would stay in balance and still equal $300,000. So I have an unfilled customer order, and I also have a receivable or a bill. And this would be in GL 4251. From that point, typically, we prefer that our customers will pay, and generally they do. And once they pay, it's going to move out and clear the bill in 4251, and it's going to move to 4252, which is our reimbursements earned or collected. And it's at this point that we would have received cash from the actual cooperator to satisfy the transaction and the obligation to pay us for services performed. Now, at any point in the process, there may come a time where I need to increase my sales order because I know that the scope of work has since expanded. And in that case, you would submit a revision to Minneapolis for the sales order, and they would increase from the general estimate into the actual sales order. And that process, again, make sure that the accounting system stays in balance. So I would have added $50,000 to increase the sales order now to a total of $350,000, but we know that some of it's also down the chain. And then also the anticipated reimbursements come in and increase the unfilled customer order. At all times of the day, it seems that all of the accounts within the spending chain are constantly changing. We have people that are making access online transactions, payrolls coming in, people are submitting expenditure adjustments or SUs, which would change the 4902 balance, and it would relieve money. So if you decrease your 4902, the money is going to go back into 4610. And if in fact you did that, but you had already billed your customer, you would also want to decrease your bill, because now you're saying that you haven't spent as much as what you've collected. Now, because we only do this quarterly, there is an opportunity within 3 months of time where you might have additional payroll that comes in and then adjusts the buckets, if you will, to make sure everything stays in balance. Now, at the end of your sales order, likely what you would find is that most of your expenses are going to be in 4902. You might have some available budget left in 4610, and we might have some left to bill, and maybe a majority of it is collected. So the process that we need to work on now is if everything's complete and we've done a final account reconciliation, what the field office would do, working with the budget analyst and the agreement specialist, is to revise the agreement and sales order to close it out. And when we close the sales order out, we want to ensure that the final bill has been paid. So we would reach out to our customer, ensure that they got the bill, they understand that it needs to be paid, they haven't disputed anything, and then they're going to pay it. We'll just assume that pretty much everybody does what they need to do. And from this point, the work with the customer is pretty much complete. However, we still have to clear out the available budget and the unfilled customer order without an advance, because these are showing as available budget in our accounting system that potentially we don't need to use. And the process by closing this out, again, is to work with Minneapolis, the agreement specialist, and the budget analyst. And when it's flushed in the system, these amounts just go back to the general balance. At times, Minneapolis will put in more sales orders than we have received an estimate for within the budget execution support branch, and we can always increase these large values. At the end of the year, we do make sure that the large values and the estimates at the agency level are decreased to zero. But the hope is that by using a tactile demonstration of moving the amounts through the available budget and the spending chain from 4,700 through 4,800, 4,901, and 4,902, you're able to understand that the sales order process and ultimately the billing and the collecting from our cooperators and our customers is such that we're only billing for amounts that have been fully paid out of our system and earned on the project.